Very good morning, my friends. How are you? Hope you guys are doing very well, and welcome on this new educational video from Extreme Trader. This is Salah speaking. Before we start, I'm really so proud and happy for the results of our Extreme Trader Forex Signals group for this week so far. I'm really happy and I wanted to share with you the results. This is Extreme Premium Signals on Telegram, and these are the signals we're sending to the paid members. And as you can see, most of the signals on Monday have reached the take profit level, except CAT-JPY, 20 pips of loss only against almost 200 pips of profit were made that day. Then the next day, as we can see, only AUD-JPY closed now. We will mention how many pips later at the weekly results. As you can see, the remaining signals also in profit. Then Wednesday also, as you can see, the signals went really well. Only 2 losses, each of them 12 and 13 pips. The remaining of the signals have reached more than 100 pips of profit for each of them. Almost, I think we have reached almost 350 pips of profit that day. Then yesterday, as we can see, full of profits, all of the signals. NZD-CHF 120 pips of profit, and it's still going actually. USD CAD 100 pips of profit, AUD-JPY 100 pips of profit, NZD-JPY more than 100 pips of profit. So we are doing really very well, and we have received so many messages from the happy clients. And as you can see, this guy here, he said that he have made more than 4,000 pounds of profit in the last 2 months. This message actually showing you what you can do when you are using our signals properly, and if you are prepared for the losses. As you know, we had some bad days in the last 2 months, but still this gentleman here was able to make more than 4,000 pounds of profit. If you are using proper money management and you are prepared for the losses and you know what you are doing, you can do exactly like this gentleman here, and you can make this really big profit with our signals. This gentleman here also, he have made more than $300 of profit, and he's very glad for the experience. So I'm really very proud and very happy for Angela's performance in the signals. We are doing great, and thankfully Extreme Trader is up for the expectation and holding the brand name of Extreme Trader. So if you wish to join Extreme Trader Forex Signals group, please contact Angela. You can find her contact details in the description below this video. Contact her today, and hopefully we will see you there. So let's now start explaining the strategy, and please bear with me because this video is gonna be long, but I just want to summarize all the rules that we need to follow in the 20 pips a day strategy. So the very first thing that we need to answer is which pairs that we should select in order to obtain more pips and easier money. And the second question is, what are the best times to use this strategy? Okay, so let's see right now. Which pairs are the best to select and comply with the strategy? These are the pairs. You can take a screenshot or you can write it down on your notebook. In general, all of the pound pairs are actually pretty much useful and profitable. And just a small reversal can actually give you a lot of profits. And also Euro-JPY, Euro-AUD, Euro-NZD as well. The reason I'm selecting these pairs, because let me just show you that. As I told you, just a small reversal can actually means a lot of profit. Let me just show you here. For example, pound NZD. If I just asking for a reversal at that resistance, for example, this is the 5-minute time frame. Let's go to the 4-hour chart. As you can see, just like that, and boom, the 20 pips are done. So all you need is actually very small tiny reversal, and you will get some profits. Unlike, for example, CAT-CHF, for example, in order to obtain 20 pips, you need actually a big reversal. Let's check another pair. Euro-Pound, I think. Look at that. 20 pips, it means it's gonna mean a lot of volatility in the market, and we need more liquidity in order to obtain this much of pips that we are seeking. So that's why I selected these pairs. They are gonna be more profitable for you. Also gold, I have another strategy for gold, that you can scalp the gold on 1-minute time frame. But if you want to actually make profit using the gold with this strategy, you really need to use IC Markets broker. The reason is IC Markets providing very low spread. As you can see, the gold spread is very low. In general, it's lower than 2 pips, as you can see right here. This is the spread right here. What is this? What did I select? All right, This is the spread for the gold. As you can see, it's very low. Therefore, applying the 20 pips a day on this pair is very useful. However, let's now move to the next question. What are the best times to use the 20 pips a day strategy? Daily time, actually, it is from 7 a.m. until 5 p.m. GMT time, Greenwich time. However, from 9 p.m. until 12 a.m. GMT is never an option to trade. That is the time when the market goes in very low volatility, and most of the sessions and the markets are actually closed. Therefore, it's really not advised at all to open any trade during these times. So please be careful and be wise about what time you are selecting to trade the 20 pips a day strategy. Let's now move to the next slide. The very first thing we need to understand about the rules of the strategy is support and resistance. Of course, this whole strategy is based on support and resistance. I actually have many videos on my channel. I have explained more about support and resistance. I cannot explain everything in one single video. Therefore, we will just go to the headlines and what we really need to know about support and resistance to be applied with the strategy. So let's first understand more about support and resistance. So as we can see right now, actually support and resistance are happening all of the time. Every single time you see at the you look at the market, there will be always a support and resistance happening. Let me just show you, for example, right here. If you think about it, every single time you can see that the market has reversed from a certain level, that is automatically represented as a resistance. And if you see the market has reversed from a bottom level, that is of course immediately represented as a support. So every single candle, every single movement representing a support and resistance. If we look at this chart right in front of me, we can see that we are having here a resistance, here a support, and here support, even here support, this one here resistance, this one right here support, resistance, resistance, support, and so on. So every single bullish reversal is considered as a support, every single bearish reversal considered as a resistance. Now of course it's deeper than that, it's much bigger than that, but I'm just explaining to you what are the things that we need to know about this strategy. Now the next thing that we need to understand is every single support and resistance will always and forever be breaking out. Always. No matter how many times, how much longer it's gonna take, or how many candles, it's eventually gonna be breaking out. As you can see right now, we had here, for example, that support level. That support has been broken out by this bearish breakout candle. Keep it going. We are having right here a support level. That support has been broken out by this bearish breakout candle. Here we had this bearish reversal, right? As we can see, eventually that resistance has been broken out by this bullish breakout candle. Even here we had a resistance level. That resistance has eventually been broken out by this bullish breakout candle. So every single time, no matter how big or small the time frame you are using, every support and resistance is gonna be broken out later. So let's continue seeing that. As you can see, we had here a previous support level, and that support has been broken out by this bearish breakout candle, this one, because the support level is exactly right here. So the breakout candle is right here. Later on, that very same previous support level has become the new resistance. Again, that resistance has been broken out by this bullish breakout candle. So if you think about it, you can see it happening all of the time, every single time. Always there is a resistance, breakout, a support, breakout. There is a support right here, breakout. There is here a support followed by bearish breakout. We had here a resistance, bullish breakout. So every single time the market is gonna break out the support and resistance. Now here is the trick. Let's now move to the next question. How to determine the key or strong support and resistance levels? Yes, actually we need to know what are the strong support and resistance levels, because as you can see, as I told you, this support and resistance thing is happening all of the time, and we cannot keep relying on every single time when a previous support become a resistance to open a trade. We need to determine what are the key resistance and support levels, what are the strongest support and levels, the strong support and resistance levels. It's very important actually. So let me just now go to the 4-hour chart. Let me just show you one trick that you can actually determine where are the strong key and support resistance levels. Now, of course, the strong key support or resistance levels can be always determined by seeing the market has reversed as a long wick like that, or like that. When you see the market has reversed from a support or resistance, and you see there is a long wick at the top of the resistance like that or like that, it means that the market has made a reaction. Once the market has reached this resistance level, the market could not even close as a candle there, as a bar, or close near to the price. Immediately once the price has reached this level, the market immediately made the bearish reversal. That indicates that this level of the resistance is quite very strong. The same thing happening right here also. Once the market has reached the top of that level, as you can see, the market has made this long wick here, indicates that the market or the rejection at that level was very strong. Now, is that enough? Absolutely not. We need also to look at how the market has reacted to these levels. For example, if I want to mark all the key support and resistance levels, for example, we have here a support, and also here we have a support, and here we are having also a support, and here also a support, and here also a support. But what's happening if you focus or you think about it? What happened here that the market kept bouncing at these support levels and kept going down, meaning the market continued to break out of that support level. So going to the next support level, the market has made the bounce, yet it continued to actually break out of that support level. So that is not a key support level. These are just the pullbacks. The market is just reversing at these levels, but it's not the key support level that we are seeking. So then finally we can see that the market has reached this level right here and made the bullish reversal, and the whole direction of this bearish trend has been changed to be bullish trend. So the trend has changed right after hitting that support level. That is, my friend, called key support level. It is the key support level. So the key support level is the level of the support that has actually changed the direction of the trend. Same thing, we can see it right here. This trend was moving down. As we can see, we had here a tiny small support, yet the market has actually made the breakout of that support level and kept going down until it finally hit that level and made the bullish reversal and kept going up. So that is exactly what we call a key support level. These are the levels where we want to focus at, and we need to mark it because we're gonna need it for the strategy. So I have put the line here on that key support level, and I'm gonna put it also at the next key support level, which is exactly right here. There is another key support level which is exactly right here as well, because the market was going down in a bearish momentum. Then after hitting that support level, the market has changed the direction. So in other words, the key support level is the support that actually changed the direction of the trend, and the support level, which is gonna happen all of the time, is just like the bounces, and the market is not actually gonna break out of these levels. Don't worry, I'll come later to the part where we can actually, or why we are marking these key support levels. We are going to use them for this strategy. Now, of course, one second, guys. Okay, now of course the very same thing applied for the resistance. As we can see that the market here has made this bullish reversal or the bullish momentum. Every single bearish reversal we can see is represented as a resistance. So we can see that here we have a resistance, here also we have a resistance, and right here we have a resistance. Yet every single time the market has reached this resistance level, immediately it break out of it and immediately continued rising. Look at that, the market reached that resistance level, made the pullback, and continued the rise until it finally hit that resistance level right here. Now, after hitting that level, the market changed the direction completely and now moved from being a bullish momentum to a bearish momentum. Therefore, that here represented as a key resistance. That, my friend, right here is represented as a key resistance. So we are going to need, or we need to understand these basics in order to continue in the strategy rules. So we have answered the first two questions and how to determine the key or strong support and resistance levels. Let's go to the third question, is when will be there a breakout of any support or resistance? Now, of course, the breakout is going to happen every single time. As I said, look at that. When the market has finally made the breakout of that resistance, the breakout was very strong. It was quite a strong momentum, and the market finally continued breaking out until it hit the top resistance or the next resistance level. Every single time we can see that happened actually. Look at that. When the market, we have here a key support level, and the market reversed right here as well, and here and here. And finally, when the market made the bearish breakout candle, immediately the breakout was very, very strong. That's why when you see the market actually making the breakout of a key support or a key resistance, you need to understand the breakout is going to be massive and the market is going to continue changing the direction. Let's see, for example, here. Sorry. Let's see, as you can see, I have marked these levels also. This is the key resistance. This one here as well. And this one. And look at that. Once the market has actually made the bullish breakout candle, the direction of the trend changed now from being bearish to bullish. So the market now is not moving in a bearish momentum at all. Now it's moving in a bullish momentum and completely changed the direction. So the answer is the breakouts are going to happen every single time, but when it's breaking out from a key support or resistance level, it's going to be different and it's going to be massive. That is exactly where we want to place the trade, my friends. It is exactly when the previous key support or key resistance, for example, in this scenario, it's when this previous key resistance become the new key support level. We need also to understand that these levels are permanent. These are permanent levels, my friends. Let me show you. I will delete these two lines. And as we can see, we had here this support levels, right? This is the key support level. Let's check together the past of this key support level. So in the past, it was also a strong resistance level. Let's continue. Let's keep it going. I'm going back in the past. Look at that. 22nd March. The very same level I draw recently, it was also a very strong key resistance level. Look at that. The market was not able to break out of this level. Even when the market made this fake breakout, immediately it fall down and reversed. Let's keep it going. Keep it going. Look at that. Perfect. Check it out. Then in the 25 October from 2019, this pair was still representing as a support level here, so it was still respecting the level. Look at that. Even in May 18, 2019, the very same level I drew, it was still being respected as a key resistance level, even right here and here. So the point is, these levels are permanent, and once you can see any key support or key resistance level, it's gonna remain as a key support or resistance forever. Now, understanding more about attempt 1 and 2. This is not like that. Actually, I need to fix it. i.e., 1 second, guys. This is not half. This is attempt 1 and 2 of any support or resistance. Now, we need to understand that what we are going to do with this strategy is, as I said to you, as I just explained to you, every single key support or resistance level is going to be breaking out, and that key or support level is going to be another key and support level. So, in this scenario, we are having this previous resistance. That resistance has become the new support. That is considered as first attempt. This is attempt actually. Let me just fix it. Attempt. All right. So that is the first attempt of the support level right after the breakout candle. Let me show you more examples of a first attempt, because actually they are happening literally every single time. The first attempt is always considered right after a breakout. So we are having right here a previous resistance level. That previous resistance has been broken out by this bullish breakout candle, and the market visited the very same level of that resistance, creating attempt number 1. So that's the first attempt. Later on, the market has made the breakout of that level, okay, and visited again the very same level of the resistance. As we can see, that resistance kept its position as a resistance. So that for me is also now the first attempt of the resistance. Keep it going. What we are having right here is a bearish breakout candle. We can see that we had here that support level. Then the market made the bearish breakout candle from that support level, and now has turned to be a new resistance right here, right now. That is a resistance. This is the first attempt. So literally every day there are so many first attempts happening across the day. As you can see, every single time we're having here, let me just zoom in. We had this resistance level. The market has made the bullish breakout candle, the bullish breakout of that resistance, and we immediately had the first attempt of the support. All right, forgive me for my handwriting, it's completely shit with the mouse. Anyway, that is the idea, that every single reversal happening after the resistance, for example here, become the new support, that is considered as first attempt. That is exactly where we want to actually apply the strategy. For example, we can see right here that the market, after, look at that, the very same support level we just talked about. This support level has been immediately broken out by this bearish breakout candle. Now the very same level of the support has become right here the new resistance. This is very important. We need to understand right here, this one is resistance number 1, because it is the attempt number 1. So we represent it as R1 or attempt 1. Later on, what happened? Remember guys, we are on the 4-hour chart. What happened later? The market has made this bearish reversal, created here a support level, and immediately went up. And look at that. This, my friends, considered as resistance 2, because now after the bearish reversal like that, it went up again, visited the very same level of the resistance 1, and created the next attempt of the resistance. Therefore, this is considered as attempt 2. Now, it's very important to mention that in my strategy, I believe, or I trust only in these first 2 attempts. Only the first and second attempt of any support or resistance is what we are going to rely on. And when I say we are relying on it, meaning we are going to place the sell order on any of them. If I see the market has visited the very same level of this previous support level, here is where I'm going to place my sell order. Then I'm going to wait for the market to reverse again and visit the very same level to create the second attempt or resistance number 2, and I'm going to place another sell. Now, if the market visited the very same level for the 3rd time, that's a big no for me. I don't care to enter the trade, because most likely if the market is gonna make a 3rd attempt on the very same level, it means that the market is trying to break out of that level. Therefore, we need to avoid it, and we need to continue trusting only the first and second attempt. Don't enter the third or fourth or fifth ever. Even if you see the market has reversed so many times, even if it reversed for 10 times, don't think that the market is actually gonna reverse, because the more attempts, meaning the more potential breakouts. Alright, so we need to keep this in mind and always be avoiding the third attempt and beyond that. So let's focus only on the first and second attempt. So that has covered the first slide in our presentation. Let's now continue. Now, when do we place the buy or the sell? After understanding more about support and resistance, let me just tell you, we aim the first attempt when a previous support becomes a new resistance and vice versa, meaning we are going to place the buy order at the lowest level of a support and buy on the highest level of a resistance. Now, of course, the strategy is not that simple. It's not as simple as telling you place sell or buy when the previous support becomes the resistance. No. It's more than that. Don't worry. Let me now show you more rules of the strategy. Now, let me just try to find the better option. Or we are in the CAD CHF. Let me go to the Euro USD. I think it's going to be better idea to show you the strategy right there. I'm just trying to find any valid setup here. Let me just show you, my friends. I need to find the best setup to explain the strategy. Just 1 second, hold on. Alright, so I found a good example, and please guys bear with me because this can be the best example on how to apply the strategy. Now, what we can see right here is we're having a support level. Remember, I'm on the 4-hour chart. So we can see that we had here this support level. That support has been eventually been broken out by this bearish breakout candle. Now, it's all about this bearish breakout candle. Let me just mark it right here. It's all about what's gonna happen inside this box. Let me just show you. Right now, that is how you apply the strategy. Look at this bearish breakout candle. What you will do is you will bring this line right here and you will put it at the top of the body of this bearish candle. And you're gonna bring another line like that and place it at the very bottom level of the body of this bearish breakout candle. That's it. Now look at that. We are having right here this bearish breakout candle which has actually broken out from that support level. Now let's look at the left and find the nearest resistance. Where is the nearest resistance? Let's keep looking. What we are seeing here is a support, 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 support. Aha, resistance. I can see that there is a resistance. Exactly. Now, after seeing that resistance level, let me just delete that. That is the nearest resistance level to this bearish breakout candle. Now, the strategy rule is, when you see this bearish breakout candle and you see the nearest resistance in the range of the breakout candle, that is exactly where you are going to place your trade, is when the market visits the very same level of that resistance, when that resistance is gonna keep its position as a resistance. That was the whole point of explaining more about support and resistance and the breakout, because it's very important to understand this rule, because that is the golden rule of my strategy. Now, as you can see, that resistance level right here, let me delete, no, I will keep it. Actually, you know something? I need actually to change the color of this one, so it's gonna be easier for you to understand. Exactly. And this one here also. Change the color. I think this one. Alright. So let me just also get rid of this shape. Oh shit. Alright. Not a problem. Let me draw it again. So that's gonna make it easier. So, in other words, the red lines representing the border of the breakout candle, and we look at the left, then we see that we are having here the nearest resistance in the range of the bearish breakout candle. That resistance in the future is gonna keep its position as a resistance. That is exactly where I'm going to place the sell order. So immediately once the market has reached this level, I'm gonna place the sell order. Now, the rule number 2 about that, let me just see the slide. We should select the nearest support and resistance to our entry as a take profit level and set the same as stop loss. Again, we should select the nearest support resistance to our entry as a take profit level. So let's go back. Now, since we have placed the sell order right here, and we are expecting that this resistance is gonna keep its position as a resistance. Now, where is the nearest support or resistance? As we can see, the nearest support, for example, the market has rised all the way, the market rose to this way and reversed at that resistance. Now, if we need to, after understanding more about support and resistance, where is the nearest support and resistance to my entry? Let's look here. Where is the nearest support or resistance? It's exactly right here. Now, because after the market has reversed from that resistance, it's gonna continue falling until it hit this support level. That is the nearest support level to the resistance. Therefore, that's gonna be the take profit. That is where we are going to aim our trade, and therefore we can expect how many pips in this trade, for example. 20 pips. That is the 20 pips a day strategy. Exactly. That is your target. You have reached it. Congratulations. You have reached now the target of the 20 pips a day strategy, and by that you have actually made 20 pips in this trade. Now, since we have placed that trade right here on that level of the resistance, and we set the take profit right here at the nearest support, it is going to be more safe to actually select the very same level, the same amount or same pips as a stop loss. So for example, if I opened my trade right here, that is gonna be the take profit level. So it's gonna be exactly 20 pips, and the same is gonna be for the stop loss. Exactly. That is the point. So if you place the trade right here, your take profit is gonna be at the nearest support or resistance, and the stop loss is gonna be exactly the same amount. Let's now move on. The strategy tips. For a starter, aim only one trade per day for the first week. Later on, you can start opening 2 trades every day after getting familiar with the strategy. Now, there is a very important thing about this strategy. We are relying on the daily or 4-hour or 1-hour chart. Actually, this strategy works well in all time frames. It works on the 15-minute time frame, 30-minute time frame, 1 hour, 4-hour, daily. It works with all of them. The idea is we need to get 20 pips in each trade. Now, since it's actually a little bit hard to find this perfect setup, that is actually a good point, because by that we can limit your trades. We don't want you to keep trading the whole day. I don't want that. Actually, Forex is so beautiful, it's so profitable world. We just need to understand that we cannot keep trading the whole day. You just need to find this perfect setup, find it and enter it, and by that you can actually limit your profits and your losses if in case they have happened. So all I'm asking, in the first week you can just open 1 trade per day until your account grows more, and once the account grows you can actually start opening 2 trades every day, and in the future you can open even more trades, 5 trades, 10 trades. Just I need you to get more familiar with the strategy. Next thing is completely avoid using the strategy when the market moving in high volatility due to economic news. Now of course we need to understand that strategy is not gonna work. It's gonna be not gonna be effective when the market actually moving down or up based on some news. The best example I can think about is Brexit. At the time in 2016, when they have actually voted for Brexit, the pound just kept falling down and down, just like sinking like Titanic, and using any strategy of any kind on that time is gonna be useless. If you are gonna think to find the reversal, it's gonna just eat your account, because the market just kept falling down based on the news of the Brexit. So you really cannot expect any bullish reversal at that time. Try to aim only the very trusted setups that completes the strategy rules. There is no room for I hope it works, let's see, or I'm praying for it to work, please go up, please go up, please go up, please go up, please go up. No, that isn't gonna work. You are not a forex trader, you are a gambler if you keep doing like that. If you just keep looking at the candle and begging it to move up, that is not really how traders do their work. I want you to find only the very trusted setups, only the setups that you really trust, that give you example, giving you a perfect setup. Actually, I need to find more setups just to show you what I'm talking about, my friends. Let me show you, for example, let's go recently here on the Euro USD. Now, Euro USD, as we see, we are having right here this support level, and we are having this bearish breakout candle. So let's now draw the line like that at the top of the body candle, and another line at the bottom of the body candle, or the candle body, sorry. Now, where is the resistance? Look at that. We are having here a support, 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 support. Resistance. So exactly it's here where I'm going to place my line. Let's review the rules, guys. Maybe we have forgotten them. Placing buy at the lowest level of a support and buy on the highest level of the resist. Wait a minute. Placing buy and buy. Oh my god, I made a mistake here. Sorry. I need to edit that. I don't want any mistake on my slides. Placing sell. Sorry guys, that is sell. Sell on the highest level of the resistance. So let's just continue. We aim the first attempt. Placing buy at the lowest level of a support and sell on the highest level of a resistance. So where is the highest level of the resistance? It's exactly right here, right? That is the resistance. Where is the highest level of the resistance? It's right here. Look at that. The market has reversed exactly at that level. That resistance has kept its position as a resistance. Now, since I have placed my trade right here, where am I gonna set my take profit level? It's gonna be, of course, right here, because this one here is the nearest support. Please look at that. The candle still falling down, and if I happen to place any sell order right here, look at that. I'm already in 34 pips of profit, and I'm aiming actually 40 pips from this setup. Now, since I have placed my trade right here, and that is my take profit level, I'm gonna set the very same as a stop loss. So this one here is the stop loss, and this one here is the sell, and this one right here is the take profit. They are equal, and the stop loss is just exactly as the take profit. Let me just try to find you more examples, since I think this is the most and major rule of the strategy. Now let's take a look at that. As we can see, we're having right here a bearish breakout candle from that resistance. So let's now follow the strategy rules. Let's draw a line at the very bottom level of the candle body, and another line at the another side of the candle, like that. Sorry. So let's try now to find the nearest support to this level. As we can see, we're having this tiny support, but it's not really what we want, because this one has been followed later by this bearish breakout candle. This is not really counted, so let's continue moving. Where is the nearest support? And we can see exactly, it's very clear right here. So after seeing that the nearest support to my entry was this support right here, let me now draw a line, and therefore I'll be sure that the next time that the market reverses on that same level, that support is gonna be respected as a support. And look at that, it happened. The market has reversed exactly at that support level. It just went down for almost 20 pips against me. However, it also kept going up, and that is fantastic. I have to admit that opening a trade here, it actually might cause us to lose the trade, but however, let's think about it. If we open the trade right here, where is the nearest support or resistance to my entry? Let's look at the candles one by one. That was, of course, all of that didn't happen. All right, all of that did not happen. We are just now here opening the trade, and we are aiming 20 pips a day from this strategy, or the nearest support or resistance. The nearest resistance actually is right here. That is exactly the nearest support or resistance. The nearest resistance is exactly right here, and therefore if I happened to open any trade right here, the take profit is gonna be right here. That is gonna be my take profit level, and as we can see, the market has eventually reached my take profit level. And since I'm telling you that the very same amount of pips for the take profit is gonna be for the stop loss, so the take profit here in this scenario is 56 pips, and the stop loss is gonna be the same 56 pips as like that. As we can see, the market did not reach the stop loss. Eventually the market has reversed and went all the way in the profit and hitting this nearest resistance. That is the strategy rules, guys. That is how you apply the strategy. I believe I have showed you enough examples, and I really hope you guys will apply this strategy and you are going to share with us your experience with the strategy. I believe I have really covered the most of the strategy in this video. I did my best to make it very simple and very clear. So hopefully in the future, when I post any live trading video, it's gonna be now more clear to everyone to understand more about the 20 pips a day strategy. So I think that covered it all, and in the end I hope that was informative to you, and I would like to thank you for watching